Gold kicks off Q4 on a weaker tone as world markets rebound, but the World Gold Council says not to throw in the towel just yet, and there's still a case for gold. Joining us in studio today is Will Rhind, who's the CEO of World Gold Trust Services. It's a subsidiary of the World Gold Council. Well, thanks so much for being with us in studio.
Thank you. Good to be here.
So we're going to look at gold today, obviously, with you. And one thing that you say and the World Gold Council says is maybe we shouldn't be focusing so much on U.S. interest rates and whether they will hike and when they will hike, and focus on a broader picture, right?
Sure. And that's mainly for the simple reason that the majority of gold demand doesn't come from the U.S. or from U.S. investors. It comes from China and it comes from India. So while U.S. interest rates clearly are important to gold, they're not the defining factor because gold is a global commodity that is the majority consumed outside the U.S.
But would you not say that the rate hike is weighing on gold right now?
Yeah, it is certainly a factor in the overall pricing construct for the gold market, but it isn't the deciding factor. And that again is because gold is a global phenomenon and the majority demand comes from outside the U.S.
All right, well, I want to pull up a chart on GLD now. And you say that despite lower returns last quarter, it is important to focus on the slower pace of outflows in the gold market. Is there a case for gold on the investment demand front?
Absolutely. There is a case for gold on the investment, not just demand side, but from a portfolio construction perspective. And we believe at the World Gold Council that gold should be part of a diversified portfolio. And the reason being is because gold is a diversifier that has a low correlation to equity markets and to bond markets, but also provides a tail risk hedge in market dislocation events and higher volatility in the markets.
Well, it's a really difficult context right now for gold, right? We have stronger equities, we have the strong US dollars, we have, Christine Lagarde of the IMF coming out yesterday saying she says she sees a prolonged period of commodity suffering. How does gold remain relevant in this environment?
Because gold is a little bit different from the majority of other commodities. We say gold is unique, and what we mean by that is that gold, the amount of demand for gold is not just focused from investors, it's focused from consumers around the world. So over a longer term, gold is actually correlated with economic growth. And while that may be counterintuitive to some who look at it purely from an investment lens, it's actually straightforward when you think about it from the global demand perspective, because the more an economy or the global economy grows, you get more savings produced, and gold is used as a byproduct of that for consumption purposes as a luxury good.
Now, I'd like to wrap with an interesting chart you brought us that shows the frequency and magnitude of negative market events and how it keeps growing. Do you expect gold to play more of a safe haven role going forward? Will we see more of these events happening?
I think so, and we're at a kind of inflection point where gold prices are down year to date,
right,
but they're down less than the S&P 500 year to date. And so therefore gold has outperformed on a relative basis the US equity market, which a lot of people have viewed as being a bastion of strength in terms of global equity prices. And for gold, we are seeing now with the market down an increase in volatility in the market, and gold did perform well in August when we did see that dislocation, largely on the back of the global equities repricing off the Chinese events and in global slowdown. So we do think that we will start to see more volatility in the market, and this is a great time for investors to be thinking about diversifying their portfolios and adding a bit of gold or increasing a position in gold in expectation of further diversification probability.
How much longer do you expect this volatility to continue for? When can we have some stabilization in the gold market?
Well, I think the gold market itself has been pretty stable, certainly throughout this year. We've traded in a range that has been roughly somewhere in the region of $1,150 to $1,200 an ounce. And so from a gold market perspective, I think we have been remarkably stable given the stronger dollar or the strong dollar in the market, and given the weakness in the global economy. So I think the gold market itself, has been pretty stable, and especially on the back of a strong dollar. I think it's more what's happening in other asset markets and whether that will lead to volatility, which will benefit gold.
Will, thanks so much for stopping by today.
Thank you, Daniela.
And thanks for watching this edition of the Kitco Gold Report. We'll see you tomorrow.